morning. You're watching the market right here in ET now. And before the markets, let's address the pride that India has cherished at the Asian Games. Indian athletes have bagged medals in 5 categories so far in the first day of the Asian Games in China. Additionally, the Indian women's cricket team will be competing against Sri Lanka in the finals today.
Certainly is a moment of pride, but time to put the spotlight then on the stock markets and tell you a little bit about what transpired in the week gone by. Well, the Nifty put the brakes on the 3-week gaining streak, so we wrapped up Friday's trading session around the 19,674 mark. And for the week gone by as well, we lost out. The broader markets as well fell in tandem with the frontliners, and it was the metal index that snapped its 4-week gaining streak. If you had to pick out the one sector that did manage to stand out amidst this volatility, it was the PSB index. It has been an outperformer, and that was the only index with major gains, although the PSB index's RSI still remains in the overbought zone. But if we take a look, Nikunj, at the overall weight from the heavyweights, they clearly continue to remain on the back foot. HDFC Bank, ICICI Bank, and the likes of Reliance Industries and ITC.
See, Avan, the linear move in the market is over, and I think it was nobody's surprised with the fact that we've hit what could be called as a pause button. A consolidation was overdue, and a consolidation is something which is very, very healthy. So this is something what exactly it's like saying the doctor ordered for the bulls. Where do we go here? Where do we go from here rather? My sense is that the correction is going to be shallow in nature. Two factors which are prompting me to make that kind of a view. Number one, valuations in the large cap stocks are not frothy at all. Valuations are not that frothy, and if the earnings are projected to grow in double digit with this kind of an underlying economic framework, the correction in large cap stocks is unlikely to be very large. B, right now the flows may be slightly patchy. We'll come to valuations. Let's look at flows right now. The flows have been slightly patchy, at least on the global front. But looking at the positioning of India, I guess the appetite to buy into Indian markets at lower levels, I think is going to be very large. So if you stay with this entire graphic, it's a very easy graphic to understand. For the week gone by, India fell the least, and we had the least outflows. And if India falls more, I'm reasonably confident that outflows will become inflows. So reasonable valuations and appetite to buy into Indian stocks at low levels will ensure that the downside in the market, I guess, would be limited and restricted. Now, individual stocks, they will have their compulsions in terms of valuations, delivery, give and take, ownership patterns, which would be at play. But to assume that best part of the rally for the year is over and we've hit some kind of a pause immediately after we touch 20,000 on the Nifty, I think it would be naive to assume as of now.
Think of it, we're not too far away from the recent highs, right? I mean, we've corrected 2.5% only on the Nifty, and I say only because we've seen much steeper corrections after such a heady bull move. Yes, the small caps have fallen most, but that's also only 4%.
It's a pause, Aisha, and it's a pause which I think was overdue, and nobody's. It is naive to assume that markets will only keep on going higher.
Of course, yeah.
Now, are we at a turn where we've peaked out for the year 2023, or we are at what could be called as a little bit of skirmish from the top? I think the latter is at play, which is that some give and take at higher levels, I think, is the need of the hour, and that factor really would be at play. Where I think the niggling, worry is also not the right word, but the missing link in the market right now, I think, is why are banks not participating. And if banks do not participate for an extended period of time, then the market would be bereft of leadership. But I expect that banks will eventually come back. Looking at the commentary, let's say what we've got from SBI that day, Bajaj Finance fundraising exercise, the management commentaries which are coming even from smaller banks, all of them are pointing to the fact that we are in for a good festival demand, and all of them are indicating to a strong balance sheet expansion. So if that is the underlying backdrop, I doubt that banks will fall a bit more. What you need right now is that you need an engine which will propel the markets higher. We thought that banks will rotate back up, and that unfortunately has not happened.
Yeah. On a global note, though, I mean, just wondering what's going to happen to flows further from here, given how the dollar index has been moving. I mean, we're already at 105.6.
So, Aisha, to be very frank, the Fed commentary, which was centered around optimism and was very hawkish, is going to have a niggling impact in the short term. See how flows move in the short term. It's an interplay between where global asset allocators they expect rates to move and the underlying bent of the dollar index. The dollar index is at 105. So suddenly a level of 90, 94, 95 has become 105. And on that, Fed has already superimposed or thought that interest rate hike cycle is not over and US economy will continue to chug along very smartly. If that narrative, so the narrative has changed, and because the narrative has changed in the near term, back and forth I think will happen. But India in my book is, and if I speak to my friends globally and locally, the sense you come back with is that okay, India is a special situation stock and it will continue to command that premium given that right now global growth is very bereft. There are a couple of conferences which are happening in Mumbai, and I've been told that JP Diamond would be in India meeting fund managers. I know a few folks who are attending those conferences. So the India interest I think at its peak, and when you're showcasing the companies and the macros of India, it naturally means that at lower levels the appetite to buy into India will come back. It could be so this is a drawdown, and I don't think anybody should be very worried about this drawdown, so to speak.
All right, but having said that, it was certainly a tough week for the global markets, in particular for the US. You also had the fourth straight day of losses for the three major indices as we wrapped up the week on a pretty tempered note. Third straight negative weekly performance since March for each of the frontline indices. The Asian markets as well, it's looking a little bit mixed. It's inflation data that will be watched out for quite closely in Singapore as well as in Australia later this week, and Japan as well will be coming out with some inflation data. The GIFT Nifty indicative open as well for our markets in terms of what the cues we're taking for our markets is indicative of the fact that it could be a fairly tempered move. In fact, let's also take stock then of some other interesting news and updates. And I'm curious to get a Nikunj's take on this as well, because we understand that the NSE is now finalizing plans to extend their trading hours. This is for equity derivatives. So they're contemplating that there could possibly be an evening session between 6 p.m. to 9 p.m. where market participants can continue trading futures and options after the regular trading session. So this is what they're proposing, Nikunj, given the fact that they want to allow traders to react to global events sooner. It was in the month of Feb that Nikhil Kamath had tweeted saying that this could affect people's mental health and things like that. How are you reading into it?
See, I don't know about mental health. Of course, we'll have extended working hours. That for sure will change. So a lot will change, at least for us, at least in television, if this is implemented. Let's understand the spirit behind it. The spirit behind it is that, look, NSE wants to align Indian markets with perhaps what could be called as, when Indian markets are shut, and given that right now there is global volatility, NSE in a sense wants to keep the Indian market window longer. And this is in line with, let's say, what other global markets are doing. But it will not be easy to, while it will be easy to implement, and there would be a lifestyle change. And of course, brokerages will have to come up with maybe double duty, or they will have to come up with a plan where remotely things could be done. So that is something which the system will adjust to. But long trading hours means that there will be a lot of activity in the F&O market. There are a lot of companies who come out with numbers post 4 o'clock. There would be immediate reaction in the F&O market. So a lot will change in terms of the market discovery. A lot will change in terms of price action. And when one market is trading, and then if the cash market is not trading, so bulk of the market action would actually start moving there. This is fantastic news if you are really looking at analyzing the market purely from the lens of GIFT Nifty. So a lot of factors are at play right now. NSE has given a proposal to SEBI. Let's see what we hear back from SEBI. While one is the core implementations in terms of infrastructure, alignment, everything that would be done. When market opening moved from 10 o'clock to 9 o'clock, nobody was happy about it. But then the system actually adjusted. So system will adjust. But is it really worth the effort?
That's the point, I think.
Is it really worth the effort? B, is the Indian market that deep enough to have this kind of an extended hour in the F&O market? And then I also worry about what will only F&O market do, which is that it will definitely lead to increase in terms of trading activity, retail options, speculation, mental health. So a lot of factors are at play.
Well, in case you're wondering, the NSE may actually mull extending the evening session all the way till 11:30 p.m. later. That's what the report suggests. But anyway, that's when it happens. The GIFT Nifty is indicating once again a quiet start for us. So let's see which way we head from there eventually. But Harsh is here to give us a color on how the global commentary has been over the weekend. Harsh?
Well, yes, let's first start off with Bill Ackman. Fairly large tweet and largely surrounding his view on bond yields. He believes that the 30-year rates will rise further. In fact, he's expecting 30-year rates around that 5.5%. That is his view on with regard to valuations. He believes there's a buying frenzy in around the 4% mark, especially in the 10-year bond yield, and therefore he believes that the bond yields will start to rise. Reasons he cites is that, of course, there's no peace dividend left anymore. The world is a very different place. There's a long-term deflationary trend which was playing out, which is no longer playing out going forward. And of course, there were outsourcing of production which was happening from China, which is not happening anymore, and energy prices are going up there. He's also expecting the long-term inflation rate to be well above the 2% mark. He believes that's an unrealistic number, and he believes that the green energy transition is and will remain incalculably expensive. And he believes that the national debt in the US is rising rapidly and is definitely a cause of concern. So that was Bill Ackman, largely on bonds and surrounding bonds. Let's quickly move on. We also had comments coming in from the Boston Federal Reserve President, Susan Collins. Well, she believes that rates will remain higher for longer than earlier suggested. The recent inflation data is, of course, positive, but considerable patience continues to be required, is what she believes from policymakers. And it's too soon, of course, to be confident that inflation is on a sustainable trajectory back to that 2% mark. So she still believes that there may be a reason and there may be some tightening which she doesn't leave off the table. Largely, again, surrounding that entire the rates with regard to FOMC which came through last week.
All right, thanks very much, Harsh, for giving us a roundup as what the global commentary has been. Time to connect with our chartists, and we've got with us CA Rudramurthy, who is now joining in on the technicals, as well as Naresh Mirani. Naresh, let's get a quick take from you then. First up, given the fact that we managed to snap that 3-day gaining streak and the heavyweights really took a pounding, in particular the underperformance in banks was evident. What have you made of the trade setup?
So we are getting back into the range. The whole momentum got fizzled out by breaking below 19,800, 700 levels. So we get back and now find a new range. So whether we take a reversal from 19,700 or go towards 19,500, 400 levels is a tough call. And again, it's the problem of the heavyweights. We've seen HDFC Bank continue to drift lower, Reliance Industries drift lower, and even ICICI Bank. So these are the three heavyweights which are not turning around. The mid-cap and the small-cap indices have not seen a similar cut. They have not retested the recent lows. So overall, we are stuck in a band and waiting for some heavyweights to give an indication. Overall, the market has a positive bias, stock-specific, but it would keep getting more selective, unlike what was happening in the 2 weeks before this.
All right, let's get in Rudra's take as well. And Rudra, what are you penciling in for this week?
See, for me, this monthly expiry of September will be very crucial this week, and Nifty coming below 19,800 for short term is not good. So I will not adventure any buy unless we go above 19,800 on Nifty. And similarly on Bank Nifty, the levels are 45,100. So till we cross 45,100 on Bank Nifty and 19,800 on Nifty, for me, this market is still tough for me to buy fresh for very short term. In fact, it is a sell on rise market for me. And as Naresh told, yes, that band of 19,500 will now act very crucial as a support range. And if we break 19,500, yes, lower levels at 19,200, 300 can act as support.
Okay, let's talk stocks as well. Rudra, what's on your list?
See, for me, I have a list of both buy and sell calls, and I'm very stock specific in this market. So granules looks very strong to me. This stock has added a lot of open interest with prices moving on the upside, and it has given a very short breakout now, and closing above levels of around 327 to 330 zone will lead this stock to move towards levels of around 355. So I will be a buyer in granules for an initial target of 355 with a stop loss of 328. I have sell call on HDFC Bank. Definitely the strong support which HDFC had at 1530 was broken on a weekly basis, and it was a decisive break. So every rise now on HDFC Bank will be sold into for short term. So I'm looking at initial targets of 1500 and even 1450 to come on HDFC Bank. Having a strict stop loss of 1550, I will sell HDFC Bank in futures. Also, Axis Bank for the first time on Friday was showing that distribution pattern to me, and it was just a choice between ICICI and Axis. So I have selected Axis Bank to again sell, looking at initial target of 990 with a strict stop loss of 1035.
All right, let's find out what Naresh as well has picked out as his individual stock strategies. Naresh?
First is a buy on Gale India. The stock gave a breakout before and is now retesting the breakout levels. Overall, structurally, the longer term charts look interesting. The stock hit a new 52-week high, as well as a multi-year high on a dividend adjusted basis. A good entry point here, risk reward trade, and a defensive stock as well. Stop loss at 117 and a target price of 135. Second is a buy on Granules India, one of the few stocks which actually showed resilience over the last 3-4 sessions. Covered it also 2-3 days back. The stock is sustaining about the 330 mark for the last 3 sessions. Good relative performance to the Nifty as well as the Pharma Index. Could see a move towards 375 levels, stop loss at 325.
All right, there you have it. Top trading calls coming in from our charters. But I bet you're wondering which stocks are on the radar today. We've got Anisha here to discuss just that. Let's start off then with Bajaj Finance. It's a big fundraise that the company is going to announce on the 5th of October. And this is post the recent 1195 crores that they had just raised as well via NCDs.
No, actually, it's been a long time that they've taken a big fundraise. Otherwise, Bajaj Finance used to come to the markets every couple of years to kind of raise the funds to fuel their growth. But the last time they did a large, fundraise was back in 2019. So it's been a while. And of course, growth was slower during the COVID time, so they did not need as much capital. But even if you look right now, the book is well capitalized. They have a ratio of almost 23% right now as far as their balance sheet is concerned. But they're going ahead announcing that on October 5th, the board will meet and likely announce a fundraise. The street is penciling in that this fundraise could be anywhere between $800 million to $1 billion, so around 8,000 crore is what the street is expecting. Very important news coming in because, of course, this is reasonably ahead of time. This also, kind of depicts that the company is expecting strong AUM growth going forward. In the last many quarters, we have seen that the AUM growth per quarter has been anywhere between 27 to 32%. So that kind of growth rate is likely to continue or only accelerate. Yes, there will be a dilution when it comes to the EPS by just around 2% in FY24, but the book value per share might rise as much as 6% and 11%. So overall, it remains very strong as far as the growth prospects are concerned, Nikunj, and this big fundraise is an affirmation to that.
See, Anisha, they are raising money when they don't need capital. They can easily go without raising capital for another 3-4 quarters. So why are they preempting a fundraise? They're preempting a fundraise, A, because liquidity may be available, or B, then they are looking at perhaps growing higher than the historical averages. Bajaj Finance has surprised that how companies at large scale can also grow. I mean, there are very few companies when they become large of the size of Bajaj Capital, they can have double-digit growth, and that too the best in the industry. So Bajaj Finance in a sense has delighted and surprised everybody. So fundraise is a clear indication that they are raising money ahead of the time, and this is growth capital. B, if one looks at Bajaj Finance, this I think is the most important point for me. The valuations for Bajaj Finance currently are cheaper than the pre-COVID levels, and they're even cheaper than the pre-IL&FS crisis level. That is important, that they're raising capital, they're growing on a large base, and the franchise like Bajaj Finance available at a price to book which actually is cheaper than the pre-COVID levels and even cheaper than the IL&FS crisis. So that just tells you that right now it is not an expensive stock. It has not become Humpty Dumpty. Everybody likes it. Institutional investors, they own it. But in terms of valuations, I think it is cheap. It's becoming quite strange to look at the private banking space or the private financial space where the sumo stocks are available at valuations like never before. Whether it is HDFC Bank, there are other factors at play. But for Bajaj Finance, which has been a survivor and it has flourished post-COVID, it is available at valuations which are cheaper than pre-COVID. How ironical is that?
Yeah, and for Bajaj Finance, I think right now it's less than 5 times price to book, and at peak, Nikunj, it was what, at 10 times at one point of time?
Trailing 10 times. Right now it would be about 5-6 times depending on the cut you look at. But yes, it is cheaper than pre-COVID.
Significantly cheap, not just like 10-20%, but significantly cheaper than the historical averages. Interesting. So that was about Bajaj Finance, but the other one that I'm talking about is some of the metal stocks, because steel prices, they have been on the rise. In fact, in the last 3 to 4 months, we have heard almost 5 to 6 price hikes coming in. So the good news is that these price hikes are getting absorbed as well. This time around, there's almost a 750 rupee per ton kind of price hike coming in for the HRC steel. This is the second price hike which is coming for flats as well in the month of September. There's a decent demand coming in as far as the domestic front is concerned, but the other part is that the raw material price is rising, and that's why there's another reason for all of these steel companies to go ahead and keep taking these price hikes. Analysts believe that given the sharp increase in coking coal and iron ore prices, the steel mills might attempt more such hikes going forward as well. And there was a note coming in from Kotak as well, talking about how post-monsoon the demand has been pretty much all right. Weaker monsoon and seasonal restocking tightened the domestic market and allowed price hikes, notwithstanding the sluggish regional prices as well. They expect that the steel margins will firm up in the near term, but cost inflation would require further price hikes to sustain the margin. So a bit of a double-edged sword coming in, that yes, there are price hikes, but it's not price hikes which is going to directly increase your realizations and contribution. That's because your cost is also going up.
See, my point is that it's rare to assume that the metal rally would last without the support of China. Psychologically, that is such a big impediment that, okay, demand is coming back, but demand in a sense will not be at its peak because China is just not there in terms of a big commodity guzzler any longer. If that is the underlying thought, then the P multiples or the underlying perception for metal stocks in the near term is not going to be strong. I guess where Indian metal companies will score is because they become much more efficient, and there are some tailwinds which are at play, at least for, let's say, Tata Steel because of what's happening to the UK operations, and JSW Steel because they're expanding capacity. But in general, if you're talking about metal prices, I guess it's pretty much a beam balance right now, where yes, prices are going higher, but ditto when it comes to managing the raw material cost as well. There's a time when steel stocks were 2020 FY22 was a time when steel stocks had become gold stocks, and that era of ultra high profitability for the steel sector per se is over. So while some specialized steel companies will still qualify the cut, whether it is Mandana or JSW Stainless, maybe Tata Steel because it becomes a special situation stock, but in general I don't think this is like the real uptrend in the commodity cycle when you can say that steel stock should be part of your portfolio.
Yeah, absolutely. That's the take coming in on Bajaj Finance as well as the metals names. Anisha, thanks for flagging off both. We're going to take a very quick break. As we do that, hear it out from Nikunj Mishra as well as Sanjeev Prasad and what they're making of the defense sector right now.
On defense, I think it's a medium-term opportunity, meaning that we know that there is going to be more focus on Atmanirbharta, that is more self-dependence. Globally, spending on defense is starting to go up. And when we think about defense, we have to think beyond just, the final assembly of submarines or the final assembly of planes. It has to be the whole ecosystem. As a theme, I'm observing that because everyone wants to invest in defense, everyone wants to invest in railways, there is a very steady rise in price to earnings multiples without an appropriate visibility on what's happening to their own order books.
Even though we are quite positive on the longer term story of more spending by the government on defense capex, more innovation taking place, we should all be positive for defense stock, but a lot of good news and more is actually getting priced in. So that's a limited point we're making out in many of these reports that we have been putting out. We're not comfortable with the valuations.
Welcome back. Lots of stocks in news today. Let's start off first then with JSW Infra. The IPO opens for subscription, and this will be the first company from the JSW Group to launch an IPO in the last 13 years. Let's understand all of the details on JSW Infra. We've got Sharad here to break it down for us. Morning, Sharad.
Well, yes, in focus we are having JSW Infra, and this is the company coming in after 13 years from the JSW Group, and do remember this is almost the second largest private port operator as well. Now the IPO subscription opens today, and if you're looking at the details of the company, face values are roughly 2 rupees per share, price band ranging between 113 to 119 rupees per share. Overall, the IPO size is roughly 2,800 crore rupees, and this is entirely fresh issue of shares. Now overall, if you look at the proceeds application, this will be going in for the reduction of debt and also an expansion in certain terminals. Now the management had earlier stated to ET Now that the company would actually become net debt free also post the IPO. If you look at the company itself, they are having roughly 9 port concessions and a cargo handling capacity of roughly 158.4 million tons per annum. Now, interestingly, the company's revenue breakup, if you look at it, roughly 65% comes from their anchors, which is their group companies actually making the movement in the port for JSW Steel, and the remaining is for third party, roughly 30 to 35% of revenue contribution comes. Now, we did analysis on the EV EBITDA front on the FY24 numbers, and over here, the only listed peer they are having is Adani Ports. The valuations looking at it is Adani Ports is coming at 13 times its EV EBITDA multiple on FY24, while for Adani Ports, this is coming in at 20 times.
Thanks very much for giving us all of those details. Let's move right on then and focus in on Delta Corp. We understand that they have received some tax notices to the tune of about 16,800 odd crore rupees from the DG of the GST Intelligence. This is for the for the period between July 2017 and March 22. The first notice is for about 11,140 crores against Delta Corp, and the other notice of about 5,500 crores has been raised against 3 of its subsidiaries, which is Casino Delta Denzong, High Street Cruises and Delta Pleasure Cruises. They have said that the GST demand is based on the gross value of bet value and not on the gross gaming value. The company has said that they will pursue the legal remedies in order to challenge this order, saying that these demands are not company specific, but it's an industry-wide phenomenon. So as of now, you've got Delta Corp, who is saying that they are seeking legal counsel, and they have said that they have been advised that the notice and the accompanying tax demand are arbitrary and in violation of the established laws, though the Delta Corp has said that they will exhaust all legal remedies in order to challenge this tax demand.
Okay, the other one in focus today is going to be Relige Enterprises as well. As you can see on your screens, there is an open offer for acquisition up to 90 million shares, which represents about 26% stake of Relige Enterprises. Ajay is here with more details on this. And Ajay, it's interesting to note that all these companies are the Berman family group.
Well, that's correct. This is very big news indeed coming in that Bermans have actually launched an open offer for Relige Enterprises. Remember, here on ET Now, we broke the news just few weeks back when Bermans had picked up additional stake in Relige Enterprises in block deals at 9:15, and we told you that first. So after that block deal, spate of block deal which happened, Bermans had come close to 22 odd % as far as Relige Enterprises is concerned. Now Relige, if you track the story, was one of the NBFCs came under pressure because of the earlier promoters, etc. There was a resurrection happening there, led by Rashmi Saluja and her team, and then Bermans got into that company and raised their stake, and the latest block deal got them closer to 22%. And since that, at 220 rupees a share, that block deal had happened. Over the last 1 month, even in a falling market, Relige Enterprises continuously rose and ended at 270, because market kind of was expecting that Bermans would come and launch an open offer. Now, something interesting to watch out for, they've got Care Health, which has been doing phenomenally well in this business, in Relige Enterprises. Not many people know that this is the second largest insurance company, healthcare insurance company after Star, and has been doing very well. They have NBFC, which they want to, grow big, and a brokerage firm as well. So we understand that after this open offer, the Burmans would actually work even more closely with the current management in order to grow the company, because insurance is doing well, market is doing well, so broking has tailwind, and NBFC business, as we all know, most of the NBFCs are doing very well. It has got strong tailwind. So why not, infuse some money, get into the kind of work even more closely with the management and raise, the valuations and perhaps, improve the numbers, basically add value. That's what Burman family wants to do. They've tried it with Everready as well, and now with Religare. So this is a very interesting development which has happened right now.
Right. Ajay, just a clarification, MB Finmart, Puran Associates, VIC Enterprise, Milky Investments and Trading Company, they're all Burman Group companies?
Yes, that's correct. These are all Burman Group companies, and they want to consolidate their stake to obviously over 25%. That's why from 22 currently, which they hold, that's why this open offer has been launched.
Right, thanks for confirming those details. Ajay there with the latest on the open offer for the Religare stake. Let's move right on then. It's at one of the ceremonies for Micron. The Union Minister Ashwini Vaishnaw says that the global semiconductor industry sees India as the next big semiconductor hub. What's next for India when it comes to the chip space? Let's listen into this exclusive conversation with my colleague Sumita Karir.
You've just stated that by December 2024, right, you will have India's first India-made chip. But what's next for phase 2? This is phase 1. What's next coming up for phase 2?
See, the speed at which this project has progressed, that speed and the methodical execution by our Prime Minister has given a lot of confidence to the entire global industry. And G20 also played a major role in that, because G20 was, the way it was organized, this has reinforced the trusted global supply chain, global value chain partner that has got that Prime Minister has established our country as. So that confidence has got reinforced. So that this kind of, all these factors are today placing India in a situation where the entire world wants to come to India. So we should see very soon at least 2 more very good proposals in the coming months. Let's say in the coming 4 to 6 months time frame, we should see 2 more very good proposals which will establish India as a leader in some of the very niche and specialized segments in semiconductor industry.
So I also want to ask about, you've been in touch with other semiconductor companies as well. There have been visits to the United States as well. How is the global semiconductor industry? Because remember, we are in the era of a chip war. This is the chip race to sort of dominate the next set of technology. How are your global counterparts seeing India?
The entire global semiconductor industry sees India as a natural next big semiconductor hub. Talent, we have the talent. Design capabilities, we have the design capabilities. Green power, a major component of our power generation capacity is today green.
Okay, let's move on. And now that Indian bonds are going to be included in the JP Morgan Emerging Market Index, how will it affect PSU banks specifically? Samit is here with that analysis. Samit?
Of late, seen a strong uptrend, and one of the major reasons behind this was the JP Morgan bond inclusion. Now they have added Indian bonds, and this will be effective from June 2024. Now in the past 1 year, if you see the index provider, that is JP Morgan, has also added China, Brazil, Indonesia and Malaysia's government securities also in their index. Now China's 1 year government security yields dropped by around 60 to 70 basis points before its inclusion that happened in Feb 2020, and what the analysts are expecting now is that there could be a fall in the government securities also going forward. So hence, and because of this fall, as per BNK Securities, PSB banks remain one of the major beneficiaries because they would see treasury gains in their books. Now among the public sector banks, SBI, PNB and Indian Bank would stand to benefit the most as per BNK Securities. Now treasury gains would contribute around 10 to 12% of their FY24 pre-provisioning operating profit as per the brokerage note. Now their brokerage note also says that if there's a drop of around 25 5 basis points in the government yields, then SBI's quarterly PPOP would be higher by around 11.7%, while that of Punjab National Bank would be higher by around 10.5%. The other major beneficiary is Indian Bank, which would see an uptick in its PPOP by around 8%. Other banks like Bank of India, Bank of Baroda, Canara Bank and Union Bank would see an uptick anywhere between 4 to 7.6% as per the brokerage. So keep an eye out for PSU banks in radar. They have already run up a lot, but BNK Securities has says that there could be an uptick anywhere between 4 to 12% when it comes to the PPOP, quarterly PPOP of PSU banks.
All right, thanks very much for giving us those details, Somit. Let's connect then with Sandeep Sabharwal as well, who joins in on the fundamentals. Morning, Sandeep. It's expiry week already at the end of September. What has been your key takeaways as to how we've been trending? The fact that now we've clearly put the brakes on that 3-week gaining streak. What's the sense that you're getting when it comes to the frontline banks in particular, which have underperformed?
So I think given that financials constitute the maximum proportion of the frontline indices, and they are also the most overowned segment in the market. So to that extent, as the correction unfolds, we will also see financials give up gains. But that said, the financials overall are very well positioned in the complete market context. So I think as we see, as is my view, that October, November, as we see some sort of sell-off in equities, that will be the time to look at buying some of the large cap banks and possibly some NBFCs if they come to decent valuations.
Right. You know, talking about NBFCs, have to talk about the Bajaj Finance fundraise, Sandeep. What is it that you're making of it? Because they're well capitalized with Tier 1 CAR in any case of about 23% odd. But A, clearly they anticipate growth, and B, feel that right now is a good time to fundraise.
It's actually quite intriguing, Aisha, given their high capital adequacy ratio. Why do they need to raise funds now? So I think it's very tough to understand unless and until they believe that it's a very good valuation to raise money. And you see the spate of IPOs these days. I think this week itself, there are so many IPOs. So every company believes that if valuations are good, better to raise money now than at a later time when they might not be able to get these valuations. I think that's the only explanation. Otherwise, given their capital adequacy ratio, I think the next few years growth, they actually don't need capital.
Okay, fair enough. Meantime, wanted to also understand your outlook then, Sandeep, when it comes to some of these metal stocks, owing to the fact that, as we discussed as well, that there is going to be an overall rise in prices. What have you made of the overall move that we witnessed in the metal stocks, and do you believe that we could now see some sort of consolidation?
The metals is not a very strong long-term story. So there will be periodic bouts of upswings, given the fact that what's happening in the Chinese economy and the fact that the global economy is expected to slow next year from the rate at which it's going this year. The overall metals basket doesn't have any big story other than trading rallies. So we've seen some uptick in coking coal prices, input prices, and as a follow-through steel prices, etc., which will benefit these companies in the short run. But longer term, there is no big story in my view.
Okay, that's the take coming in on metals. But let's talk about Bajaj Finance. And Naresh, I want you to come in on the charts for Bajaj Finance, because, you know, a lot of talk in the market right now about the fundraise that they're going to undertake. And this comes, 2020 also, in fact, I recall they were the first ones amongst the Indian corporates to actually tap into global markets for about a 750 odd crore rupee fundraise at the peak of COVID. So just wanted to understand whether, because valuations clearly are, way cheaper than their peak valuation of 10 times. But is the chart also indicating that there could be significant upside from the current levels on Bajaj Finance?
So technically, as of now, it doesn't look like a lot of upsides here. If we go back to 2021, the stock topped out closer to 8,000. It three tops around that area in 2021 and start of 2022. Then in 2022 also, the stock came up to 7,700, 7,800. And fizzled down to 55, 5,700. Back in July also, a couple of months back, the stock came to 8,000 and dropped to 6,800. So it's very clear that 8,000 is a mark which is a tough one to cross for the stock, and 5,500, 5,700 has been the base. The near-term bottom at 6,800 is where short-term supports are left. So I think going forward, we may get into a range of say 7,000, 6,800 on the downside, and 8,000 on the upside. It's only when we go beyond this 1,000-pointer range, the longer-term trend changes. So for now, it is still a stock which can remain sideways for a few months.
Sandeep, the other intriguing piece of news which just came in was this open offer for 26% stake in Religare by the Berman family group. What are you making of that?
Yeah, so I think that follows the natural course because they had expressed interest by buying out a large stake from the overall markets and some shareholders. So I think it's a natural follow through of that process. Now, given the fact that the market price is much higher than their offer rate, so the probability they'll get anything is very little. So I think once they make the open offer, then they can also look at raising stake through different measures as if the stock price corrects or if they want to increase stake at a higher rate also later.
Sandeep, do you take a look, or rather, have you taken a look at JSW Infra? They're going to IPO. It's open for subscription today onwards. It's the first from the JSW group in, I think, over a decade's time, 13 years to be precise, and close competitor to Adani Ports, if you can call it that.
So from whatever I've read, it's a similar business model of both, and valuations are somewhat cheaper than Adani Ports, although not as cheap as one would like. But I think these days IPOs come at a premium. So among the set of IPOs which are on offer these days, I think JSW Infra is one of the more reasonably priced, although not priced as well as I would like. Especially during an IPO, the pricing should be better. But I think given the way IPOs are getting lapped up, the promoters and the merchant bankers have no reason to price it lower. But I think it will get through, and longer term it should do well. I don't know what will happen immediately at the time of listing.
Sandeep, stay on with us. Lots more to talk about, but here are some other fundamental ideas coming in from our experts.
What I'm gathering is that there is a big surge in terms of what people are wanting in terms of premiumization. I met the two-wheeler players, met the four-wheeler players. Everyone has a view that people want to buy this premium and the super premium vehicles, and also in that they want to buy the topmost category. So my biggest bet right now is two-wheelers. Very positive on all three: Bajaj Auto, TVS, and Hero MotoCorp. So these three are the top ideas there, which I would like. Apart from this, I think there is also a clear trend in terms of CVs, that CVs are also doing well, and the trend is continuing. They are in an up cycle, which is going on. So autos, particularly overall as a pack, two-wheelers, four-wheelers, and CVs looks fine to me.
If we look at the entire cap goods as a place, so I think my preference would be more on the terms of the private players, rather than BHEL. So maybe at this price, I would avoid BHEL. Maybe at correction, I would look at it for a longer term play. But if I have to look at something like Siemens or something like ABB, though the valuations are expensive, but I feel that there will be a safety and the risk versus reward would be quite favorable from here. So I think again here the returns could be also a very moderate kind of a return. The stock has done well, so I think these are only 12-15% compounder from here. So that is what it looks like. So my sense is I think again Siemens and ABB remains the top bets in that entire sector.
Okay, that's the take coming in from some of our other fundamental experts as well on which way they feel the markets and, of course, individual stock ideas as well. But PSBs, let's pick up on that, Naresh. Everything from a Canara Bank to a BOB held out on Friday. Do you sense any momentum continue or follow through?
So it could be time to book profits in names like Canara Bank and BOB on rise from here. They've made a decent enough move, and if you look at it, may get into overbought zones at say 390 to 405 levels for Canara Bank, and has moved up after the breakout about 330 odd levels. So that would be a time to book some profits on Can Bank. Same at 230 odd levels, Bank of Baroda becomes overdone for the short term. So time to book profits there is shift towards SBI because that's the one which has underperformed majorly. And over the last 1.5 years, the stock has not been able to cross 620-25 levels. And now 560, 580 has become a base. So at 600, the risk reward is well placed for SBI. On the smaller names, the float is terribly low in names like IOB, UCO Bank. Those have seen a speculative move. Time to totally get out of them.
Right, there you have it. That's the view coming in on some of those PSBs. But let's shift gears then and talk about what we're discussing on the editor's radar today. And it's an interesting report coming out by Goldman Sachs talking about how MSCI India underperforms when Brent crude prices rally. And let's talk about what history has shown us as well.
You know, you always tend to think that, but you look at, and this is Goldman Sachs data.
Yeah.
So I'm going to just quote them, Goldman Sachs data. What they've looked at, excuse me, what they've looked at is that they've looked at more than 20% rally in Brent. So every time when crude has rallied or Brent has rallied more than 20%, the first point in which you think that crude going up, Indian market should go down. But is that passé now? Looks like that seems to be a passé because more often than not, every time crude has rallied, the linear correlation, which is logical, crude going up, Indian markets coming down because crude is a dampener for Indian economy, that is getting challenged. Between Jan and June 2008, crude rallied 69%. Then you look at another instance, 82% rally in crude. October, followed by Feb, 33% rally in crude. Look at the MSCI index. 2008 is a special situation stock, so let's take this one out, global financial crisis. But historically, every time when crude have rallied, and we are looking at over 20% rally, there has been no linear negative correlation. Let's look at one more graph and then we'll show the average in terms of where the market has stood out. So the average rally in Brent, when it has been more than 50%, MSCI index, according to Goldman Sachs, has given you a positive return. And you look at ex-Japan portfolio, that's also plus. Bottom line here is that what should have been an inverse correlation, actually there is no correlation whatsoever. So while we spend a lot of time in discussing that, okay, crude is up, that is bad news for Indian market, of course it is challenging for macro. Of course, if crude goes above $100, $110, then it reaches that level of where it really hurts and haunts the macro. But below $100, closer to $85 to $95, every time crude has gone higher, in the near term, Indian markets have had no linear correlation whatsoever. So every day in the morning, looking at the crude price and judging the market, I think may not be a great idea.
Yeah, so the Goldman view is Indian markets could continue to stay resilient despite what we see with crude oil prices. Interesting there, Aisha. Could probably get an expert's take on this as well.
Yeah, absolutely. Sandeep, what are you making of the way crude is headed and its bearing on our markets?
I think Fai's words were just spoken that there is no real correlation, so very little to add on that. So I think you can actually generate spreadsheets to show anything. So I think a lot of people come out with their own analysis depending on the time frame you take. I think crude rise beyond a particular level is specifically negative for sure for the Indian economy given the inflation and trade deficit dynamics, because trade deficit in India still continues to be very high, and capital flows could possibly reduce given high interest rate, high bond yields globally, and reducing liquidity. So I think X of that, very little to add.
The other stock that I want to pick up on is, Sandeep, HDFC Bank. And, I'll come to our chartists as well and try and analyze the charts from here. I mean, after that analyst day that they had last week, quite a significant move on HDFC Bank. Just last week, Kunal was also talking about that he could actually see levels of 1300 as well. And 1300 is the price when the merger first got announced in 2022 April. That's where the level the stock actually drifted to when the merger got announced. But yes, the analyst day has mentioned that they do see some pressure on the margins, but this has been a rank underperformer.
Yeah, so I think when the merger was announced, I think it was very clear that it's not in the interest of minority shareholders. It was done more as a measure of convenience, because HDFC standalone the business was becoming more and more difficult given the fact that competitive intensity in the housing loan segment was growing from banks, NBFCs, everywhere. So they were possibly betting on getting some concessions from RBI. So they got some concessions on priority sector, but not much. And CRR, SLR, they could not. And also, unfortunately for them, their merger got triggered at a time when interest rates are actually rising. So that made the liability refinancing even more difficult. I think tough times should last for another 12 to 18 months at least. Now, whether the stock will underperform for that period or we see a sharp correction which takes care of the longer term underperformance, that is tough to predict. But a 1300 price is, if it comes, I think it will be an excellent price to buy at those levels. At these levels, current levels, I would not be a buyer. I would think that stock should trend lower.
Rudra, what do you see on the charts for HDFC Bank? How much pressure? Because it would have a bearing on the way the Nifty as well moves.
Yeah, Aisha, after the gap down, what it had on 20th of September, the stock continues to move down even 2 days post that gap down. So this tells to me that selling is nowhere ending. Crucially, the support even at 1530 is now gone. So having broken first the initial support at 1560, now 1530 getting broken, I won't be surprised to see another 100 rupee kind of a move on the downside. Initially, it has to now take next support closer to 1400, 1430. If we even break that, yes, further lower levels, if I have to see the support, it can come closer to around 1300 to 1320. So for a very long-term portfolio kind of a buy, yes, I will look at buying HDFC Bank only closer to that 1300, 320 zone. But for a very short-term trader, now this stock having broken those crucial supports first at 1560 and now at 1530, every rise will be sold into, and that gap, whatever it has got created on September 20th now, acts as very stiff resistance on the upside. So till we cross 1600, I don't see any momentum coming on the buy side. Rather, every rise will get sold into, and I'll be a seller at current market price or even on any rise, looking at initial targets of around 1430 and eventually 1300 to 1320 can come on HDFC Bank.
GIF Nifty is indicating that we could be in for a 12-13 point cut, but that is simply par for course. So Sandeep, is it that phase of the market now where you need to really just take a long break and say I will come back because there's nothing to do? Markets are not that expensive where you want to sell. Markets are not that cheap that you want to buy.
Yeah, so if you are fully invested, you can still look at possibly getting into some cash out of stocks which have very high valuations. But X of that, I would agree that there's no case for selling out any big time because there will be a correction, but then the correction will not be, let's say, a 12-15% Nifty correction. So I think it might be just taking out 30 to 50% of the current move, which implies a 6 to maybe 8-9% kind of correction. So out of that, 3 odd percent has already happened. So that's what we would wait for. The mid cap, small cap indices movement has been much more aggressive. So there is possibility that if there is a sudden drying out of liquidity or outflows, there we could see more jerky corrections. And I would still think that the mid cap side of the market provides us better opportunities than the overall large cap side. So that's where we will have to look out for. But I think that should be some weeks off.
The mid-cap index in this year is, that has just gone gangbusters, so to speak. Sandeep, are you still holding on to your position in Titagar? Titagar, yeah. You bought Titagar at 140, 150, right? Or even lower, I don't remember now.
Yeah, we bought at 110, but then it became more than 20% of some portfolios. So we cut down the holding because I don't want to hold so much of a particular stock. Then the portfolio just moves on the movement of that particular stock. So we've cut down holding, but we are still holding on to around 50 to 60% of the initial holding.
Any other railway or defense stocks, Sandeep, where you would have exposure and perhaps have cut back in the last 1 or 2 months?
Yeah, across the board on the high flyers, we have cut down, and I would think that there'll be better opportunities a few weeks down the line because, like we've seen, some of the railway stock actually sell off over the last couple of weeks. We will see that happening in defense also as there's too much retail participation in these stocks. So I think that will be the time to buy. Again, I think it's a repetition of what I'm saying because I think the entire mid cap side as so category will have a correction, should have a correction rather. I don't know whether it will, and everything should correct together.
HUDCO, Housing Urban Development. Naresh, this reminds me of one of those Hindi picture dialogues. Huh? Naam to suna tha, HUDCO, up 20%, suddenly shoots up.
So we've been seeing one by one PSUs keep making that breakout moves. It's happened across the board now. And anything on the financial side has also caught up. So even IFCI has gone up, but the trend is very clear in PSUs. So which is where HUDCO also comes into play. The stock has actually given a good breakout here at around 80 odd levels. So would be interesting to see that the fact that the stock has hit the largest volumes in the ever since the last 5-7 years. Post listing, the stock had made a top around 100 odd levels, so that would be a target. The only problem is that current levels, the risk reward is not great, but any fade off towards the 80-82 mark in the day should be a buying opportunity.
Sandeep, HUDCO, naam to suna hoga. I mean, is it going up because all other PSUs are going higher?
That was naam hi suna hai, but I haven't looked at it anyway.
I'm surprised with the volumes.
The land bank segment.
I don't know, Aisha, whatever may be the reason, but 18% higher on volumes, which are actually higher than that of Reliance Industries, it just makes you just, think and stare at the screen again. Rudra, what should one do with small tier PSU banks this week?
See, for me, I agree with Nuresh's view. These stocks have moved up too much already. So if I have to buy PSUs, that too, if you want to trade or take a short-term view, I will not be buying here because risk reward is not favorable. Look at all these stocks like either Union Bank, UCO Bank, or IOB. All these have moved up too much and in too little time. So as a trader, I will not buy any of these stocks at current level. In fact, I would advise definitely profit booking if someone has bought it earlier. And if you ask me to buy a PSU bank, I will still buy a State Bank of India, which is yet to make that move beyond levels of around 625 to 630, which has been a stiff resistance for SBI, but it has made a strong base now at around 560 zone. So I will be a buyer in SBI and looking at the targets of 625, 630 to come, and post that 630, yes, the stock can make a bigger move towards levels of 750 to 780 for a medium to longer time frame. So the only PSU bank which I would buy at current levels will be SBI, and for the mid and small tier ones of all these unions and IOB, all the other names, whatever you have, they have run up too much. Definitely a zone to book profits.
Rahul Malani joins us now. Let's connect with Rahul to understand what his take on Bajaj Finance new mega fundraising plans are. Rahul, Bajaj Capital, technically as per the balance sheet and the current growth, they are not bereft of capital. Yet they are raising capital ahead of its time. What does that indicate about the near-term and short-term prospects of the growth? Are they likely to move from the fourth gear to the fifth gear?
So basically, first of all, good morning. You rightly alluded that the leverage ratio is slightly lower or on the lower side. Historically, they have been raising the fund at when the leverage ratio peaks at 6.5 times, and now the leverage ratio is in the range of 5 to 5.5. But we believe that if we look at the last decadal growth of Bajaj Finance, it has been in the range of 30 to 32%. And in last 3 years, it has been fallen to 25 to 27%. In light of their omni-channel strategy, all this they are live on all the platforms. So we believe that this growth is going to incremental growth will come in the range of 30%, 30% and above. So basically, this capital raising factors into that incremental growth, and we believe that this will be a resolution which would be passed, and they may look to raise at the fag end of the FY24, where the leverage ratio would be around 6 times.
Rahul, morning. Given that the expectation is that you could see a dilution of about 2% in FY24 EPS, are you expecting some sort of an incremental impact or a fall in the overall ROE?
So basically, definitely, this ROE will be currently the ROEs are in the range of 24 to 25%. So basically, there would be a dip in the ROE, but it will still be healthy in the range of 20%. And basically, you have to look at the book value accretion, which would be in the range of, as per the, if we look at the expectation is that the capital raise would be in the range of 8,000 to 10,000 crores, which would be 10 to 15% of the net worth, which makes the leverage ratio around 4.5 times. So basically, we are looking at 10 to 13% increase in the book value per share, despite equity dilution.
Right, Rahul, really appreciate your time. Thank you for joining us. 9:01, the top stock really would be Bajaj Finance in terms of whether market action and the reaction would be there. I will not be surprised that it will be a gap up start, and it is a gap up start. So, Nuresh, if there is a gap up start of 150 to 200 rupees, would you still chance your arm and buy into Bajaj Finance? Because the news can easily propel it up by 400-500 rupees.
So I would be a little careful here, given that 7,800, 8,000 has been a stiff resistance for the last 2.5 years. So would wait it out, let it consolidate enough, and after a few weeks or months, when it crosses 8,000, that's the point of time you accept that the trend has changed. For now, I would expect it to not cross 7,800, 8,000. Risky trade would actually be to go short closer to 7,850, 7,900 if it rises.
Okay, let's move right on then and check in on the pre-open rates, by the way, this morning. And currently, what is that exactly indicating? It's on the back foot, a pretty flat move after Friday's rout or the kind of selling pressure that we witnessed rather on Friday. Let's find out what those mid-cap trading strategies are. Naresh, what are you picking out for the day?
So that would be a buy Bandhan Bank. The stock has been showing a lot of resilience over the last 3-4 sessions. The stock has come back to that 250-55 mark, which is a major resistance. It used to be the support for the stock for the whole of 2021 to 2022. Broke below it, went below 200 levels, and now is back at 250-55. So it looks like a trend change going forward. Stop loss at 240, target price of 275.
Rudra, let's get in your top take. What is it that you're looking at when it comes to the broader universe?
See, for me, Hindustan Food has given a breakout now above levels of around 600, and a lot of marquee investors and fund have bought into. So Hindustan Food looks very good for me on chart, keeping a very tight stop loss of around 600 right now. I will be a buyer at current market price, looking at initial targets of 720, and for a medium to longer time frame, won't be surprised to see a 4-digit mark coming soon on Hindustan Food. So I will buy Hindustan Food at current levels for an initial target of 720.
All right, let's get a move on then and keep you abreast with all the other top headlines. And the iPhone maker Apple has plans to scale up their production in India 5 times to around $40 billion over the next 5 years. In fact, the company wants to start manufacturing AirPods next year. However, according to sources, there are no immediate plans to make the iPads or laptops in India anytime soon. Meantime, Goodyear Tire and Rubber has announced that they will eliminate 700 jobs and sell about 100 retail stores and fleet locations under a rationalization plan for its Asia-Pacific segment. Meanwhile, as per reports, Citi has warned that its UK-based employees of redundancies ahead of sweeping reorganization, which could affect hundreds of jobs. And after a 7-year space mission, a NASA capsule has successfully landed back on Earth with the largest samples of asteroids ever collected by humans. The samples will help scientists understand better how the Earth was formed and how exactly life came into existence. And to the world of sport, after its win against Australia in the second ODI, India will now go into the 2023 World Cup as the #1 ranked team. It scores the top spot with 117 points. And remember, India is already ranked the first in the test in the T20 rankings. And Maharashtra Chief Minister Eknath Shinde's Ganpati celebration at his residence was a grand affair. The entire entertainment industry was present to offer their prayers, from Shah Rukh Khan to Salman Khan, Pankaj Tripathi, etc. A lot of stars attended the celebration as the festivities enter the 7th day.
और ना क्या खबर है, and that's the most colloquial way in which you understand we discuss stock markets. क्या खबर है? So for that, Sharad is standing by.
Well, yes, in focus we are having Inox Wind, and over here the buzz is coming in is that the company is expected to upgrade their components from 2 megawatt power wind turbines to 3 megawatt. Now, why it is important is because the company is currently manufacturing components in the 2 megawatt segment when it comes to the wind turbine segment. Now, this upgrade is happening because the company has received recently important certifications, and these are global certifications. Now, when we receive a global certification, then the chances of increasing the institutional order that increases, and that augurs well for the stock. Now, we had a channel checks also, and over here what we are hearing is that the manufacturing capacity utilization levels that has come out on the higher side, and also the order book expansion that is expected to be higher side for the next 2 to 3 odd years. Now, overall looking at the space, the key triggers, this includes favorable government policies and timely interventions as well. So please watch out for this stock as well.
We will keep that on our radar. But what else should you keep on your radar? The correlation between crude oil prices and the Indian markets. The Nifty may have underperformed the MSCI APAC index, including Japan, every time Brent rallied more than 20%. But Goldman Sachs says that the Indian markets could remain resilient.
You look at, and this is Goldman Sachs data.
Yeah.
So I'm going to just quote them, Goldman Sachs data. What they've looked at, excuse me, what they've looked at is that they've looked at more than 20% rally in Brent. So every time when crude has rallied or Brent has rallied more than 20%, the first point in which you think that crude going up, Indian market should go down. But is that 2008 is a special situation stock? So let's take this one out, global financial crisis. But historically, every time when crude have rallied, and we are looking at over 20% rally, there has been no linear negative correlation. Let's look at one more graph, and then we'll show the average in terms of where the market has stood out. So the average rally in Brent, when it has been more than 50%, MSCI index, according to Goldman Sachs, has given you a positive return. And you look at ex-Japan portfolio, that's also plus. Bottom line here is that what should have been an inverse correlation, actually there is no correlation whatsoever. So while we spend a lot of time in discussing that, okay, crude is up, that is bad news for Indian market, of course it is challenging for macro. Of course, if crude goes above $100, $110, then it reaches that level of where it really hurts and haunts the macro. But below $100, closer to $85 to $95, every time crude has gone higher, in the near term, Indian markets have had no linear correlation whatsoever. So every day in the morning, looking at the crude price and judging the market, I think may not be a great idea.
Yeah. All right, let's get a move on then and tell you a little bit more about the index calls. What is it that our chartists are betting on by way of their position on the index this morning? No trade, says Naresh, but it's a sell from Rudra. Remember, you did see the markets which put the brakes on their gaining streak on Friday's trading session and for the last whole week. Ditto is the case when it comes to their strategies on the Nifty Bank Index. It has been quite a streak of underperformance by some of the large cap banks of late. Sell according to Rudra. Naresh says no trade.
All right, now what do we have? Let's look at HDFC Bank. Last 3 days, the tide has turned for HDFC Bank, and that in a sense has turned the tide for the Bank Nifty. Another 4 rupees down for HDFC Bank. Bajaj Finance 1.5% higher post the news. And then Religare open offer has been triggered by the Dabur family. Where is Delta Corp? It's going to be down by maximum permissible limit, down 10%. Is it having impact on other gaming stocks also? Nazara is the listed one. Let's look at Nazara. In the short term, sentiment rub-off can be dangerous. Thought as much. Nazara Tech is also down. No correlation whatsoever, guys. No correlation whatsoever. It's a casino company. This is a pure company which is in gaming. And sometimes, the rub-off effects could really be nasty in nature. You've got market open and the Nifty implied rate. So we are in for a flat start with no particular bias. So Naresh, it ultimately boils down to the fact that after last week's give and take, given that the Bank Nifty has reversed, are we in for 2-3 weeks of a lean patch with a downward bias, or last week's price action would be forgotten soon?
So as of now, the problem is we are seeing more of a pain coming from the heavyweight. So it's not the breadth has significantly lowered as such. So in that case, till the time we don't see a reversal in any of the heavyweight stocks, the drift could continue. So I would be waiting out for a reversal signal, whether it comes at 19,700 or 19,500. I don't expect a 19,250, 300 mark, which was the recent to be broken. So out over the next 300 points, you want to be looking out for a reversal signal rather than shorting this move because it's more driven by heavyweights. And the markets needed a correction. We've got a correction in the mid cap and the small cap indices too. Would be watching out if they break the recent swing lows, then this shakeout becomes a little bit of a correction, which goes up, say, goes down 5 to 10% from the peak. So as of now, it's in a confusion stage wherein you wait and watch over the next few sessions how the market reacts.
Rudra, what's your view?
Nikunj, for me, definitely this is not a level at which I will buy this market for short term. So let it cross at least 19,800 on a closing basis. Then I will look at any buying. Or else for me, based on last week's price action, this market has turned now into sell on rise market. And I'm looking very closely on mid cap index and look at the lows, what it made on that down move or the reaction which we had very recently. So if we break those levels of around 39,600 on mid cap 100, I will be definitely skeptical on this market and I will look at initiating more short positions if market breaks on a broader level. So that is at 39,600 on mid cap 100 to be closely watched.
3 minutes to go. And then I want to look at that Goldman Sachs data 1 second, guys. We've repeated it, but it's fascinating is only when you put things in context. Crude going higher, bad news. Crude above $90, really bad news. Crude above $100, scary news. And crude at $130, scary multiplied to the nth. That kind of a situation is what happens to the market. Yes, crude going higher mathematically, it is bad news, and crude above $100, it becomes hard to manage, and then inflation management kicks in. But over the years, what we've seen, stay with this graphic please, over the years what we've seen is the maturity with which Indian markets have handled the surge in crude, I think is very important. In the first half of last decade, which is let's say May 2010 to 2015, every time crude prices have gone higher, the direct correlation with the Indian market in a sense has not been negative. Flip it around and then we move to the next 5 years, which is between March and June 2022, when crude prices have gone up by 26%, the Indian market reaction has been negative. The average Brent rally, when it has rallied 50% in less than 6 months, Indian MSCI index, and which by the way also has this currency interplay, because that's how you look at MSCI India index, is actually positive. So mathematically, even though there is a linear correlation between crude prices and what will happen to Indian economy, stock market per se has given you a very different kind of a pattern. So just because crude is up, that does not mean Indian markets will come down. That's the bottom line, what Goldman Sachs is trying to indicate. So everybody is thinking that, okay, crude is at $95, time to sell India, time to get out, raise cash, India is over. No. Nothing of that kind is going to happen because nothing of that kind has happened in the past. That's a fantastic data. You just want to archive this data and keep on repeating it every time when folks come and tell me that crude is up and Indian markets will go down. It's not happened in the past and there is no linear correlation. Thank you, Goldman Sachs, for this lovely data. 40 seconds to go. We start a brand new week. There is a tailwind in Bajaj Finance. Nothing big in terms of news flow over the weekend. And then there is RBI policy. There are two issues in terms of an IPO market. So the IPO market is going to be alive and kicking in terms of whether patterns of the, whether activity in the IPO market is moving. A lot of interesting bulk deals over the week, on Friday. So some of those bulk deals will surely have an impact in the way our markets would move. But 23 seconds to go. And if you have to keep your eyes down, well, eyes down on the way how the bank nifty, defense stocks and how some of the railway stocks would move. So I'll let the screen do all the talking. The pre-open rates are not exactly indicating anything big, large, or for that matter, incremental per se. 4 seconds to go and let the rates just come up. First rates Monday morning, and we start with a print of green, but it's almost like a flat start with no particular bias, which frankly is great news given last week's price action. The breadth is positive. Now the first rates are just kicking in. You want to start with Bajaj Finance. Why? They've pulled another rabbit out of the hat, this time by saying that we will raise capital, and if Bajaj Capital is looking at raising capital, well, they're very mindful of return ratios, and they would be cognizant of not sitting on capital, raise capital, which will damage their return ratios, which means they're looking at increasing their lending. 7,500 for Bajaj Finance, the stock is doing mighty well for itself. Now, the mid-tier names. JP Power, IFCI, you've got GMR Power, IOB, Union Bank, Central Bank of India. Well, all of them have something in common. Well, all of them are positive. You've got RVNL, you've got IRCON, you've got RNRLN. All of them are trading with a positive bias. What is moving up in terms of an absolute move? Nothing big in terms of an absolute move. Let me see if I can just see that absolute move chart. No, it's not coming up right now, but nothing in terms of an absolute move. Where you want to be a bit wary is that the tiny toons have started again, jumping very, very high. So you've got JP, Unitech. Really, the small chotu ones are the ones where the price action is picked up.
Let's just revisit Bajaj Finance. Almost about 2% higher and still counting up. There's also strides. They've got a US FDA nod for one of the cardiac drugs. So look out for that as well. And hey, what is Religare up to after that open offer by the Berman family group? Let's check in on that stock. 6.5% lower. It's almost a 7% crack that you're seeing on Religare as we speak right now. On that note, I also want to check in on a couple of these companies which have made some small minute acquisitions. Renuka Sugars, for instance. A, that they've approved a fundraise of 285 crore rupees. B, they've acquired this company called Anamika Sugars for about 235 odd crore rupees, 2.25% higher for that stock as we speak. The other one, of course, is Delta Corp. Not to say the stock wasn't already beleaguered, but look at the whack that you're seeing on that stock after DG GST Intelligence has issued a notice to pay tax liability of a total of 16,822 crore rupees, which is, I think, higher than Delta's current market cap. And, needless to say, you would have seen that kind of a move on this particular stock price. REC has withdrawn as one of its nominees, Suzlon Energy. That's the stock that I'm talking about. Just bring that one up for you on your screens. And then ICICI Lombard, wherein Sanjeev Mantri has now been appointed as the MD and CEO. That's going to be the other stock which is going to be in focus. And then Karnataka Bank as well. And they've made a fundraise via preferential issue. That's the other stock that you may want to look out for. By the way, LIC also has received, I think, one of, a tax intimation. So maybe that stock as well is in focus this morning. What are PSBs up to? Canara Bank, DOB, SBI, they were the high flyers from Friday, right? Let's revisit some of those. I think that move has gotten corrected a little bit. Naresh, absolutely a flat start on the index. Any trades that are looking worthy to execute?
So being defensive here, GAIL India looks interesting at 120.21 with a stop loss at 117. Could be a good zone from where it does a retest is done and could be a bounce back from here.
All right, Rudra, let's get in your take as well. What is it that you're punching in as your first trade this expiry week and in today's trade?
See, for me, Bajaj Finance was looking very strong, both in terms of news as well as stock on the chart. But however, because it has moved up too much now and an entry here may not be good, I will stick to Axis Bank short call. This has been one stock which was ready for a correction, and I won't be surprised to see 990 levels to come on Axis Bank. Having seen fall in HDFC as well as ICICI, now it is the turn of Axis Bank to make that move towards 990.